ready for yet another intellectually inspiring series of sessions, which is the last 3 sessions of day 3 of the UEF Trade Summit 2025. I request everyone in the hall to please be seated, take your seats, settle in. Those of you who are still outside and networking, I request you to come back into the auditorium and take your seats. Our speakers and panelists are ready. So before we go to the first session of the day, a couple of more events that we have. First up, a video that we'd like to play showcasing the Jan Seva Bank. Can we have the video, please?
Meet Jan Seva, making money moral. For the last 15 years, Jan Seva Cooperative Credit Society has been on a mission to empower people through ethical, interest-free finance. And today, the numbers speak louder than any words. From a humble beginning in 2011, with financial transactions of just 2.24 crore rupees, Jan Seva has grown into one of the most trusted and fastest-growing cooperative societies in India. Year after year, our progress has been steady, consistent, and strong. By 2014, we reached 6.7 crore rupees. By 2016, we crossed 16.8 crores. In 2018, we touched 28.6 crores. And in 2020, despite global challenges, Jan Seva continued moving forward, reaching over 46 crores. But the real transformation happened in the last 5 years. In 2022, we crossed 37 crores. In 2023, we touched 44.9 crores. In 2024, we crossed an incredible 57.3 crores. And in 2025, we are proudly standing at 60.87 crores. Alhamdulillah, our highest ever. This remarkable growth is not just a number. It represents trust, transparency, and the power of a community working together. Let's look at what drives this success. Issued share capital has grown to 803 lakhs. Our JAF stands at 2,493 lakhs, and JMIF has reached 376 lakhs. Reserves and surpluses stand strong at 103 lakhs. Loan disbursements now total 417 lakhs, a clear sign of our commitment to supporting families, small businesses, and entrepreneurs. We have processed more than 2,700 loan cases with care, dignity, and fairness. Most importantly, our membership has grown to an impressive 54,413 members, people who believe in ethical finance, trust our system, and walk with us in this mission. For our depositors, Jan Seva has provided stable and profit returns between 5% and 9% on investment deposits. Every milestone reflected in this chart shows the strength of our model: interest-free, transparent, secure, and community-driven. Every rupee that enters Jan Seva is used responsibly to help someone start a business, build a home, educate a child, or grow a dream. From a small initiative to a 60 crore ethical financial movement, Jan Seva continues to prove that when money is made moral, prosperity becomes possible. This is more than a report. This is our journey. This is our commitment. This is the trust of thousands coming together for a better financial future. Jan Seva is not just growing. Jan Seva is moving with purpose, impact, and integrity. And the journey ahead is even brighter.
Thank you. And I wish there are more and more options are created for an interest-free economy and loans. A big round of applause. Jan Seva, please. We also have a quick message from the Managing Director of Siraj Holdings International, an investment company with a net worth of $1 billion US. So I welcome Mr. Khader Pir Sharif Sahib on the stage, sir, for your message. Can we have a mic, please?
Good afternoon, everyone. I'm actually very disappointed because I came today morning. I wish I was there 2 days back, because I spent about a few hours in the morning, and the amount of energy that I saw, the amount of vision that was brewing up was so absolutely brilliant that I think I should have come here 2 days back. So actually, this is a statement that I wanted to say: please do not miss any of those events in future. And I've been hearing this. So when I came here, I saw this 4 trillion 40 and beautifully coined. And all the people sitting in the front, pretty sure you will make it. But I was trying to figure out the people in the back, what would they think And the idea is that, is it really possible? 4 trillion for TN. And I was also thinking the same thing, 4 trillion for TN. Let's try and figure out how to do that. But the conversation today is basically I wanted to talk about our journey. This was in 2018, and that time I was actually employed. And in my employment, I went to UAE for customer meetings. And when I went to the customer meetings, and this company that I went, it was like a hospital, you know, like how doctors will come out and go. All the guys were walking in and walking out. The company was called HCL Infosystems. I was there in the morning trying to have a meeting with them. And there was so much stress and pressure that was happening there. And we didn't know what's happening. So time passed, you know, almost about 3 hours I was waiting for them to have this meeting. And nothing happened. So I asked these people, you know, what's happening? Why are we not having this meeting? Can we understand this? So the guy told me that this company was about to be sold, was to be acquired by someone. But unfortunately, the buyer had some issues, court-related issues, and therefore the HCL board said no to this deal. So the HCL has actually informed the stock exchange. It was a listed company, HCL Infosystems. They informed the stock exchange, and they were about to sell it, but they said no. So the entire HCL management was under stress that time. So I was waiting there and figuring out, okay, this meeting is not going to happen, and I left. But then what happened, and I want to connect to my earlier speaker, Ms. Bharti Bhaskar, and she was talking about the opportunity in terms of how do you find an opportunity. So that's where I found an opportunity that how is it possible to look at acquiring this company there. I want to keep it quickly here. So that's where I met with UEF. And the reason why I'm talking this is, I actually met with SMB Kaka and then said, you know, why don't we look at getting this company here? So that was the first conversation. And there was another important thing what UEF contributed. The first meeting that we also happened was in UEF office in EGMO. So myself, SMB Kaka and Dr. Sadakutullah, we were just talking, how do we sort of figure out to go and acquire? Because this is one individual with a vision. There was another individual with a vision who came, and we were trying to figure out how will we go and acquire. And the next help again came from UEF, where we need to submit a balance sheet. When you're buying a listed company, you need to come from a balance sheet. One of the sponsors, one of the UEF company actually helped us with the balance sheet, and we submitted the balance sheet of that company to do this. And story short, we successfully acquired HCL Infosystems there. Now, okay, since for want of time, sure, no problem. So we went, after we completed HCL, we grew this company. Last month, we celebrated 25 years. The point that I'm trying to say for the 4 trillion for TN is, we, via UEF, have actually contributed. What we acquired now is a 100 million dirhams company there in UAE. And we have already committed close to about 100 crores for Tamil Nadu. We have invested in Tamil Nadu, and we have already organized close to about $1 billion for investment in Tamil Nadu, and we're going to be honoring that very soon. Thank you so much.
Thank you, sir. So let's go on to the session that we've been eagerly awaiting. And this is about funding beyond investment, unlocking the next wave of growth capital. So with India attracting USD 71 billion in FDI and witnessing record levels of private equity, venture capital investment, the financing landscape is rapidly diversifying. The next wave of capital will increasingly come from sovereign funds, ESG-driven pools, Islamic finance, blended finance, and global development institutions. This session explores how Tamil Nadu can access and deploy these evolving capital streams to fund infrastructure, innovation hubs, sustainability initiatives, and high-growth startups. Through this session, we will all gain an understanding of how modern financing structures can enable long-term responsible growth aligned with the $4 trillion economic vision. And to moderate this session, it is my proud privilege to welcome Dato Hamdan Abdul Majeed, Managing Director, Think City. Ladies and gentlemen, a big round of applause for Dato Hamdan Abdul Majeed. As he makes his way to the stage, please allow me to introduce him. He's a dynamic thought leader in urban regeneration and sustainable city making. He's also an investment banker and venture builder dedicated to shaping urban policies, fostering civil society development, and advocating for impact investments. Holding a degree in economics and management from the University of London, his early career spanned investment analysis, investment banking, and investment strategy at Khazana Nasional, Berhad. In 2009, he made his leap into urban regeneration and sustainable city making by co-founding Think City, an organization focused on creating more livable, resilient, and people-friendly cities. Since then, his notable accomplishments have included the transformation of Georgetown into a UNESCO World Heritage Site and active involvement in urban policy initiatives such as Penang 2030. His steadfast commitment to creating better cities for all has earned international acclaim, with accolades such as the Eisenhower Fellowship and a special citation. A big round of applause for our moderator for the day, Dato Hamdan Abdul Majeed. Thank you, sir. Let's quickly invite the panelists on stage. First up, a gentleman who previous session moderated so beautifully, Mr. IAS Balamurugan, co-founder, Anicut Capital LLP. Again, to reintroduce to you, the investment manager to 6 SEBI-registered alternative investment funds, including 3 structured funds and 2 early-stage equity funds. These funds collectively manage 4,500 crores with a diverse investor base comprising HNIs, insurance companies, corporates, public institutions, and family offices. With over 30 years of experience in the banking and financial services industry, of which the last 13 years have been served as a professional investor, he has held senior management roles at Citibank, UBS, and ICICI Bank, where he served for nearly 17 years. His final corporate role was as joint general manager at ICICI Bank in 2010, after which he became deeply involved in shaping the SME finance ecosystem. An avid reader of history, Mr. Bala is also passionate about playing golf whenever time permits. Ladies and gentlemen, Mr. IAS Balamurugan, co-founder, Anicut Capital LLP. Our next esteemed panelist, Mr. Rafe Haneef, is the Group CEO of MBSB Holding that comprises MBSB Bank and MIDF Group. He was previously the CEO of Group Transaction Banking at CIMB from 2019 to June 2023. He began his banking career in 1991 with HSBC Investment Bank in London. Over the past 25 years, he has held various leadership roles at HSBC Middle East, ABN AMRO UAE, Fajr Capital UAE, and Citigroup Malaysia. He was then appointed as the CEO of HSBC Amana Bank and subsequently joined CIMB as the CEO of CIMB Islamic Bank. He also served as CIMB's Group Chief Sustainability Officer and the CEO of CIMB Foundation, where he was instrumental in positioning the sustainability agenda as a key strategic driver for CIMB Group. Mr. Rafe read law and Islamic law at the International Islamic University, Malaysia, and then pursued his Master of Laws at Harvard Law School. Ladies and gentlemen, Mr. Rafe Haneef, Group CEO, MBSB Holding. A big round of applause, please. A third and final panelist of the day, we have Mr. Ajmal Sharafuddin. He's an accomplished executive leader with over 2 decades of experience in wealth management, business development, hedge funds, and Sharia-compliant financial advisory. As Executive Director of MBS Global Investments under the private office of Sheikh Naif bin Aid Al Thani, he drives strategic growth through ethical, sustainable, and innovation-focused investment initiatives. His portfolio spans green tech, fintech, seed funding, M&A, and family business advisory, backed by strong global networks and partnerships. He also leads venture incubation at Clutch Eye Capital, empowering early-stage technology firms towards global scalability. Beyond investment leadership, he has contributed significantly to academia as a strategic board member and director at the Indian School of Business and Computing, ISBC, where he championed modern education standards and talent development. His commitment to fostering innovation, sustainability, and entrepreneurial success positions him as a trusted advisor across financial and corporate sectors. Ladies and gentlemen, Mr. Ajmal Sharafuddin, ED, MBS Global Investments, Dubai. Thank you, sir. Over to you, Mr. Moderator.
Thank you, dear MC, and for this wonderful introduction. I think we have a delightful panel of experts coming from different backgrounds and different experiences. But let me introduce the session itself. This session is focused on funding beyond investment, unlocking the next wave for growth capital. As we know that Tamil Nadu has articulated one of the more ambitious subnational economic visions anywhere in the world, a vision to grow the economy to $1 trillion economy by 2030, and now with the UEF efforts to push for a 4 trillion economy for Tamil Nadu by 2047. And I think this is a very bold and visionary outlook that gives confidence for capital to find home. But this is not only about incremental growth, it's a fundamental shift in how growth is financed, governed, and sustained. The key question for today is not, is there enough money in the world? We know there is. Money is looking for home. The real question is, does Tamil Nadu's capital architecture designed to absorb and deploy the right kind of capital at the right scale over the right time horizon? I think that's the critical path. I think we have heard over the past 2 days the aspects of firm creation, startups. We have heard about what you call leadership. We have heard about the economic vision. The key question that arises is that, is there capital that's looking to find home in Tamil Nadu? Now we know that for the first horizon, from now to 2030, we are going to look at about building the foundations. It's about strengthening the core sectors and upgrading the economy as a whole, moving into new sectors like green energy, pushing for faster approvals, industrial corridors, digital infrastructure, and workforce pipelines. And we have heard a lot of this. But for the second phase of this, which we need to plant the seeds today, it's structurally much different than what we see today. This is about being more globally integrated. It's about climate smart, innovation driven, and powered by patient, long tenure capital. And here's the critical insight. What gets us to the first trillion will not get us to the fourth, unless we start rethinking the approach that we need to move. This is why this panel is not about investment. It's about different capital, different risk sharing, and different institutions. We are fortunate to have a distinguished panel today, bring perspectives from finance, policy, entrepreneurship, global capital, and wealth management. So let me start maybe to hear that you have heard in the course of the last 2 days, this vision of a 4 trillion economy by 2047. What does this actually mean to you? Maybe I'll start with Balamurugan, who's from the home state of Tamil Nadu.
Good afternoon, everyone. So I think I have the job of waking up everyone after a good lunch. So I think let me attempt it. Thanks for asking this question, Hamdan. So, the most important task is to reach that inflection point. I think, Tamil Nadu has, I think, if not has already reached, I think there are signs that I think it will reach there. But just to tell you that I think the state has grown 16% last year. I don't think any other state in the country which has achieved 16%. And it's also broad-based. It comes from manufacturing, it comes from like services, it comes from software. It's not one horse-driven kind of a state. You've got like multiple engines, like I think firing at the same time. I don't think any state other than Maharashtra which comes closer to this. So also the talent pool, the number of engineering colleges, like number of number of talented people, and also the work ethic. We are far superior, like I think, when it comes to all those things. So given that, I think what we possess, also one of the longest sea coast in the country. All the way from Chennai to Kayalpattinam or a little down. So I think which is also another boon. So given all those like natural resources, talent, and also broad-based growth, the number which is put out like by the United Economic Forum is something like which I think it's possible, and it's reasonably like I think it's reasonable to say that I think it's achievable. I hope like I think some of us live long to see that happening on that day.
So maybe I'll bring this question to the other two gentlemen who are Indian diaspora from a global perspective. So Rafe, maybe what's your take about the vision that has been set forth?
I think given the scenario we are seeing, the high growth that we have seen in India in general and Tamil Nadu in particular, the 4 trillion is certainly achievable. But if you look at the other countries in the world where we have seen exponential growth from an economic front, it's not only domestic driven, but is also FDI driven. You need to see more FDI inflows into India in order to spur the development that you are looking for. So if you look at the numbers thrown around earlier, it was what, 79 billion, 81 billion? So I was just looking just now, it was about 81 billion FDI inflow into India, and the GDP of India is close to $3.9 trillion. So it's insignificant. If you look at the numbers, 81 billion looks big, but in the context of 3.9 trillion GDP, nominal GDP in India, it's a very small FDI inflow. If you look at the percentage of FDI inflow to GDP in countries like Vietnam, Thailand, Malaysia, Singapore, they're all double digit. India is still around 2 to 3%. FDI inflow is 2 to 3% of India's GDP, which means a lot more effort needs to be done to bring foreign, not only foreign funds, but also foreign expertise, where there is a gap in Indian economy. That's I think the fastest way to achieve the 4 trillion economic growth in Tamil Nadu and India in general. More importantly is to look at the areas where India is importing. So India is consistently having a trade deficit, meaning while India is exporting a lot, you have a huge $3.9 trillion economy, you are importing more than you are exporting. Some of the imports are necessary, maybe crude oil. India doesn't have much local origin crude oil, but there are many other things we are buying, like India is buying lots of electronic items, electrical items. Those can be produced here through FDI. Obsession with gold, absolutely, gold and silver. First thing they asked me when I came at the airport is, do you have any gold, sir? I said, no, I don't. I only have a watch. But I think a lot of people bring gold here, maybe for investment or for many other things. So I think you need to manage the imports better so that you can always maintain a healthy surplus on the trade deficit front. Thank you.
I think, Brother Ajmal, I think it would be good to hear from you. You come from a family office, managing family office. What attracts you to India and particularly to Tamil Nadu?
Assalamu alaikum, wanakam to everyone. First of all, I thank Almighty for giving me this particular opportunity to participate in this fantastic event. After that, I'd like to thank the President of UEF, Ahmed Bhai, and the Arcot family, and Sayyid Nurul Imran, who's been instrumental in somehow bringing me here, but I'm so grateful that I attended this particular event. I'd like to congratulate every single person who's been instrumental in making this event happen. What a vibrant event. Me coming from Dubai, we've been always attending events and we've seen large-scale events. But over there, they still lack that energy. Here, unbelievable energy. Every age category, whether it's youngsters, elders, I've seen so many elders, the energy they come with the questions they ask is priceless. So a great round of applause for the entire team who's been instrumental in making this happen. Now, in regards to the fundamental question which was asked from an outside-in perspective, I'd like to basically divide that into 3 key stakeholders. 1, the government. 2, UEF. 3, the common people. On a government level, just to second what Mr. Rafi was saying, what will attract sovereign funds or large-scale investments is by defining what is a developed country looking at. The definition of a developed country is when government, education institutions, and corporations work together as one team with a vision. And I've already seen that in the last 2 days. The speech by PTR, the speech by the other ministries, the speech by the bureaucrats, the corporations, it's already there, but it could probably be scaled up. One of the examples that I'd like to give is MBS, we are involved in an AICT project in Europe. where we have a workable model on a real estate play. And we feel similar models like that can be brought in here, which will then attract more global investments as well. On a UEF level, again, the ecosystem is vibrant and there's a lot of activities that is going on. But from an incubation standpoint of view, I would highly recommend it's being scaled up to a venture studio model. I don't want to get too technical about what's the difference, but one key factor that I'd like to highlight is, in an incubation model, you have a promoter and you're all supporting them to scale up. But in a venture studio model, you'll end up usually coupling them with a co-founder. A young entrepreneur wants a particular idea, you'll end up bringing a veteran to join hands with them. So veterans' wisdom and youngsters' energy, when you combine that, you'll end up mitigating the risk of failure and there's a better probability of success. Third key factor that I'd like to highlight again, or the most important, the common people. Guys, this is a golden era for you guys. I have never seen any other place and opportunity like this, what you've been instilled through UEF. The 4 trillion for Tamil Nadu, the way it is, the best analogy I can give is between a normal staircase and an escalator. In other places, you have to go on a normal stairs. UEF is building a state-of-the-art escalator for you, where you get into it, you will be able to scale up much faster. This is something that I'd like to highlight. But again, the key factor again stays with how you propel yourself, how you prepare yourself for that. For that, you need to first unlearn what you've learned. Going back to yesterday's discussion with the IIT and the educational panel, you're all looking at what needs to be done as self-development through self-paced learning is the only solution. That has to be highlighted. And in that regard, again, there's two. Sorry, I'm making it a little longer, but I just wanted to share these 2 points. One, I had the opportunity to be involved in a Shark Tank kind of event in Dubai a few years ago. It's a reality show, right? So when you actually have a show like that, the way people learn in every age category seems to be a factor of inspiration. You know what? This is the kind of journey that I have to take. The other key factor, which I feel is the key element to succeed, is awareness. And that's only possible through a masterclass model. Again, I want to go back to Mr. Ahmed Buhari's introductory video. There was a small video that was played, and there was a punch in it, the way he shared that. But again, in my opinion, majority of the audience don't know the veterans like Mr. Buhari or others, their journey. They don't know. So you need to capture them for them to be inspired, which will lead them to aspire and then get motivated. So these are my thoughts in regards to how we can propel localization, global ideas into localization. But otherwise, it's a flying wheel, and I see great potential in attracting global investments.
So we have heard from the panelists saying that the vision it's bold but realizable, it's realistic, but it requires what I would call a focused effort and addressing the core issues the country faces, the current account deficit, to be more FDI attractive, at the same time in terms of creating an enabling environment that would support capital investments. But the question is that as we look ahead at this vision, Tamil Nadu needs consistently $20 to $30 billion in capital investment. Now, the challenge that lies then is that there's a lot of money that's floating around. The question becomes, what is it that is required to make a much more progressive, what I call an environment to attract capital to converge into Tamil Nadu? While there will be money from government, there will be money from domestic capital, but the key question is that it's not enough on its own. But so this is where the question is that can there be, or what needs to happen that will make this place a much more attractive place for high growth investment? We heard the earlier investment that was done to Gibraltar Technologies, where it has grown 10x. There are many of these potentials that exist, but many is unknown. So maybe we could hear from Anicut. You see many of these transactions in the market, but are you seeing enough in terms of capital participation from outside that is matching the local domestic capital? What are the limitations, what are the issues that you face?
Let me take in 2-3 parts. First is, is the capital, is it a constraint? I tend to come from a school and belief, system of, I think if there is something which is good on the table, good promoter, good idea, like I think, good execution, I don't think capital is a constraint. So I think, this country has demonstrated that in the last decade. Some of those people who have attempted those ideas, the scale of imagination of that idea and scale of execution. I don't think there was any decade or last 1.5 decades or 2 decades in which they coexisted together. So I see that, I think, don't see, I think capital becoming a constraint, number one. Number two, today, what began as an industry of 50,000 crores as mutual funds, which I'm just taking as an indicator, in 95, 96, today the mutual fund industry is about some 57 lakh crores or something. Okay, just imagine 50,000 crores industry to 57 lakh crores, and it's just 3% of domestic savings. Okay, our alternative investment industry, which is does the private investments, it used to be nothing like about 10, 12 years, 15 years back. We are almost about 300,000 crores. So it's about 3 lakh crores. And, so the point I'm trying to make is the domestic industry in terms of capital, if investors see returns, if investors see good professionals evolving and intermediating between the ideas and I think the capital, it's going to flow, and it's going to flow in the way I think none of us could imagine.
Are we seeing the kind of returns that is attracting the flows?
Yeah, so I think
in adequate amount.
Yeah, so I would put it this way: every industry has I think its own growth curve. I think I just maybe D2. When credit cards came into this country, I think let's say I think in the early 90s, we had the worst of defaults I think in credit cards. It was the worst performing product. But if you look at it today, credit cards is an evolved industry. So I think the similar state I think is going through in private capital industry, or maybe we are a little ahead of that. I think we are seeing good fund managers, top tier fund managers evolving and becoming the poster boys of that industry. So which is happening. So, it has gone through a cycle, it would continue to go through a cycle, but you would have the equivalents of Blackstone, BlackRock, I think KKRs, the world, I think coming and doing business here, or evolving out of Indian fund managers. Point to prove is that Citibank was the pioneer. I'm just taking Citibank because I was part of it for quite some time. Citibank was a pioneer in many things in this country, okay, and they were pioneer in consumer lending. You know what's happening to Citibank today? They sold it off to Axis Bank. Flat 25 years time. So what you think has been happening the poster boys of the the Western world and some of the other parts of the world, they would figure out I think when they come here, they might have an advantage, but over a period of I think a decade or so, your Indian I think would have managed it, learned it. I think they would also be there at their own game, and that's going to happen. You write it and keep it with you, it would happen. Today you have got all the tigers of the world, Sequoias of the world. Already Sequoia has handed over the business to the Indian fund managers and gone. So it's a matter of time. So I think we will still need a lot of foreign capital, but that foreign capital would not be managed out of New York. Foreign capital would be managed out of the Indian cities. Quite possibly it could also happen from tier 2 cities. It's what stops when you're becoming 4 trillion TN or 20 trillion or 30 trillion Indian economy, you would have McKinsey opening office in probably in I think Sivagangai, Madurai, because they would need it. You need all those guys. So you would have fund managers sitting out of our places, our cities, maybe managing dollar money which is flowing from every parts of the world, if dollar exists that day. Thank you.
Rafi, what is your take looking at this from a global perspective? You have intermediated capital into infrastructure projects and development projects and so on. Do you see, what we have seen in China, the last 25 years has been very much a strong push of government and private sector capital. What's your view from a...
Yeah. So certainly, as I mentioned earlier, every country is now trying to attract FDIs to come to their country by providing a series of incentives. Typically, when you look at Malaysia, Malaysia's GDP is 1/10 of India. India is about 4 trillion, Malaysia is about 422 billion. This is 2024. So our size is about 1/10, but our FDI is about 20 billion. It's almost 1/4 of India's FDI. So despite our smaller GDP, we are able to attract more FDIs than India on a proportionate basis. And the reason being, Malaysia goes out and brings out the comparative advantage Malaysia has versus other countries. So this is what India needs to do. Number one, investors want to come to a country where they can operate in a seamless fashion, right? Where people speak English. English is a very important factor for India. So Malaysia and India shares a common history because we were both under British colonial rule. So if you look at our system of law, is common law, English common law based. We generally speak English. The population is familiar with English. Good infrastructure. I think I've been coming to Chennai for the last 10 years, and I'm seeing the infrastructure in Chennai improving tremendously. You can see that the airport is much better now, faster clearing, and you know the metro is being built. Some parts of the city, metro has been completed. The roads need to be improved, certainly. But these are the comparative advantage. When investors come here, they want to see whether they are having good access to land, for example. So in Malaysia, I give you 3 examples. We had one investor coming from Turkey. Malaysia typically have seen investment coming from Japan, from China, from the US, but now we are seeing from other countries. So this company is the largest producer of bar soap. You know, we use at home, soaps. These are the biggest producers, and they came to Malaysia for 3 reasons. One, government gave incentive, land, leasing of land for long term, and then we have palm oil. Second, palm oil is the main ingredient, the palm oil substitute that goes into bar soaps. And third, also skilled labor was available. So they moved their entire plant from Europe to Malaysia. So today, Malaysia is the largest exporter of bar soap that's being sent to Europe and elsewhere. Another company came from Pakistan. They set up a halal gelatin factory because gelatin is used in many desserts and pharmaceutical products. So Malaysia doesn't have a halal gelatin industry. So this technology was brought and they invested in Malaysia. Again, government, state government particularly played an important role in bringing these technologies in. The third one, recently we teamed up with China. The total investment was about $4 billion for data centers in the southern state of Johor. This was purely a China-Malaysia project where we have brought in Chinese data center operators to set up a large data center plant in Malaysia. So Malaysia, like India, is trying to get foreign investment in so that we can improve our economic performance, create economic opportunities for our people, as well as job creation for the young talent that we are bringing to the market. So I think India needs to showcase what's available. We have seen Tamil Nadu is now really going out on the manufacturing front. We need to know more. How do we make Tamil Nadu more efficient in terms of going out and showcasing what is available in Tamil Nadu? For example, we can bring manufacturers of automotive parts. Malaysia is quite advanced in producing automotive parts for electric vehicles, for example. A lot of the Chinese and American companies have plants in Malaysia. Can we bring those companies to invest in India? If they find home in India, then we as bankers can provide Islamic financing for those companies to come. Those are Malaysian companies who are now venturing into India. So we need to find what are the various options available in India, particularly in Tamil Nadu, and we can then find partners from Malaysia to come and set up their manufacturing arms in Malaysia, in India.
Ajmal, maybe if you could share from a private sector, from a private wealth perspective, what do you look out for when you are investing into maybe what do you call it, is frontier markets like India and Tamil Nadu, and what would be the kind of things that you expect to have before you put in capital investment, and what kind of horizons do you look to invest?
Just to orient you in regards to MBS today, we are setting up a financial center of our own. We are setting up a Maldives International Financial Center, which is one of the first destination-based financial center in the world. So the segregation of private and government sector is changing. It's evolving. It's no more a private office, no more a government. It's more of a collaborative effort. So our interaction has been regularly with strategic partners like Abu Dhabi Investment Authority, Qatar Investment Authority, sovereign funds, as Mr. Rafiq mentioned, in Malaysia as well. What matters the most is awareness. Last 2 days, for me, it's an eye-opening session because of the kind of data I heard and understood. There was a session by Mr. Suresh yesterday where he mentioned, again, the manufacturing sectors, the kind of GDP growth which is there, the kind of stability which is there, the kind of forecast which is there. That information has to be then done as a major roadshow to other strategic partners so that it can attract here. And one key factor when it comes to that level of capital is stability and security. The communal balance that you have in Chennai is a key unique factor that has to be highlighted. The way every community member exists together in harmony in Tamil Nadu is a major factor that has to be highlighted because stability comes first. Keeping that in mind with the manufacturing sector that you have and the people. Again, from a data standpoint of view, India is the youngest country in the globe. You have 500 million people under the age of 20, which means the global workforce is coming from India. Keeping that in mind, Tamil Nadu plays a major role because Tamil Nadu is one of the most growing economies within India. So keeping that factor, any large organization should seriously consider Tamil Nadu, and that's the perspective I look into.
So we know now that, there is excess capital and money is looking for a home. We hear that, the need to attract capital. But where do you mobilize this capital to? Obviously, in mature sectors, they are able to access finance. But then we also know there are many sectors, MSMEs, startups, growth companies. Now, how do you see participation in this area? Because that's what will define 2047. While the current companies will continue to become stronger and bigger, but the new sources of growth, or the new drivers of growth. Now, where do you see that coming from? Maybe each one of can respond to this.
I have a real example. I just wanted to share that. Recently, we are in discussions with Telangana government to actually set up an aviation city. Now, aviation sector, if you look within India, it's not as developed as it's supposed to be. You have a very young aviation minister and he's driving things much better, and we wanted to see how we can get in that space. But again, when it comes to going further deep dive into the infrastructure, into the mechanism which needs to be done, one of the key factors that we are concerned about is the repatriation of funds. Let's assume if I put $1 billion, how do I pull it back? What about the withholding tax? What about the repatriation systems? What are the RBI rules when it comes to FDI? These are the key factors that we are concerned about. Yes, today we have gift city mechanism where majority of the investment authorities are routing through that. But maybe that's one of the areas that has to be seriously looked into in Tamil Nadu through the finance ministry to see if there could be some alternative to address that, because that will also attract foreign capital much faster.
Bala, you want to respond particularly more from an angle of whether capital is being mobilized effectively to support MSMEs and the startup ecosystem, because one of the things that you read is the fact that there is more, these people are either not able to access the formal banking sector, So this is where the question becomes, can they access non-banking finance?
Yeah. So I'll take it more micro, this question. I think I'll just put it from in a very microscope view. First of all, I think, I'm a big believer. It's actually the human capital which is being chased by the rupee capital or dollar capital. It's not the other way around. If there is a good idea, a good person, good ability, I think the capital chases. Okay, that's my belief. Number two, Government of India and various state governments, including Tamil Nadu government, have set up many things in the past and continue to grow. For example, there was a budgetary allocation of almost about 10,000 crores from the central government on a fund of funds scheme, which is said I think I'll give you 20 rupees on a 100 rupees fund, so that I think you can create these startups. And that was fully utilized. So which means I think the 10,000 crores became 50,000 crores or 60,000 crores. And that was equity money. And that again, on that basis of equity, then people avail debt. Just look at the multiplying effect. It all happened I think, from the last 4-5 years of budget. And the state governments followed it up with their own grants. Their own fund of funds which has been set up and then given. But to top it all, I think I just want this to go to everyone in this room. What is coming is probably the most important, crucial government initiative, I think, which is coming in the next, I think, few months. There's a scheme called RDIF, which is Research and Development and Innovation Fund, which is announced by central government, which is about 100,000 crores. And from announcement to establishment of the nodal agency has already been done. The first set of allocation is going to be done. So here, I think the government, and I'm sure this will be followed up. I think, I'm telling you, the biggest beneficiary of that would be Tamil Nadu. Because I think there's so much research and development which is happening. We are already innovating. IIT Chennai, has been at the forefront. So given that, there's a lot of support, which is coming from the governmental support. That's one. Second is the rupee-based funds. Rupee-based domestic funds, which supported by I think the Tiger Pacific and others, have also seen the growth I think the way it has happened in the last few years. So, the point I'm trying to tell you is that if there is a good idea, if there is a good founder, if there is a if there is a scalable business opportunity, innovation driven, I don't think there is anything which is getting left out. What is getting left out is actually the traditional businesses. Okay, I was just having this conversation with one of my good friends, I don't want to name. He does I think this equipments which does, which supplies to the hotel on kitchen and everything. So there is real struggle to see I think how one raises money for such regular, I would say I think bread and butter businesses, MSME businesses, there is a struggle. There is a struggle because there is not enough money which has been created outside of the banks, and banks continue to be dominated by the public sector banks, and they have the outdated norms, which is rightfully so. I don't want to dispute that, because India can't afford a bank failure, because I think it's a political, it's a bloodbath if there is a bank bust. So from that perspective, we actually really struggle in our I think normal, good, profitable businesses which need I think money. That I think it's an area we have. So those SIDBI is our nodal agency. It has done a good job, but we are yet to go there. So I think the real gap is on the MSME, not on the startup side.
Rafi, maybe can you just share the experience that you've had in Malaysia and probably in other markets? How has, capital has been intermediated to MSME, and the role that the bank or the non-bank sector can play?
Yeah, I think if you look at Malaysia, the MSME, particularly the SME segment, is the backbone of the economy. I'm sure it's the same case in India. About 96% of the enterprises and private limited companies are all SMEs. And in the past, they used to have a lot of challenges in terms of accessing credit from the banking system. So what the government has done is that they've come up with various guarantee schemes. I'm sure you have similar things in India, but it has been expanded. So we have typically in a year, at least 3 or 4 schemes. The government will renew every year. They will say, okay, these schemes are towards, for example, agriculture. Because Malaysia is heavily reliant on imports of basic crops like even rice. We eat rice 3 times a day. If you go to Malaysia, you see morning we have coconut rice as our main dish. And we only produce 40% of our rice consumption. A bulk of it we import from India. So agriculture is a core area we want to expand. Another area we want to expand is, for example, in smart manufacturing. So there are few sectors where the government identify and they tell the banks, you go and finance these sectors on a portfolio basis, and the government will guarantee up to 80%. And we need to make sure that the NPL for that portfolio doesn't exceed 2%. So there is a discipline. We don't simply give out the money. We need to make sure the quality stands when we underwrite the credit. So we ensure that the SMEs get the financing because the government is underwriting up to 80%. If there is a default within the 2% that we want to control, we get the money from the government within 3 months. So there is a lot of support from the government to help MSMEs. In addition, we're also seeing the private sector. There are lots of private credit notes coming up, and they're also supporting the larger SMEs who want to grow. We also have set up ACE market where you can tap by issuing equity in smaller denominations, about $20–25 million. Do you have that in India?
Just take it.
We have small ticket IPOs.
Yes, small ticket IPOs. We have got an SME IPOs platform. We have a credit guarantee scheme, which is like what you said. I think today it's about 10 crores, let's say $1.1 million. You know, probably we are the fintech capital of the world.
So the size is very small.
The size is very small.
Yes.
That's what I'm saying.
Yeah.
So I think that the interventions of truth still have a lot to do there. Okay. Yeah. But what, you know, it's coming in drips. You know, also, you know, you don't have that kind of a capital, like I think, which is to put in. But what is also the other issue is the delivery mechanism. See, where we suffer is the last mile delivery, which is the banks. The final delivery is by the banks, which is, you know, that's where I think we miss out the most.
The banking system in Malaysia is very efficient.
Yeah.
The biggest growth we are seeing is in the SME segment.
Yeah.
Because our engine of growth is SME, and we are seeing SME financing growing circa 8 to 10% a year.
Yeah.
So efficiency is key, as you pointed out. And if the government doesn't support, you will not see the SMEs growing into larger companies that eventually will go into IPO and then venture abroad. The last thing that the government is trying to do is use MATRADE. Malaysian Trade is an arm of government, Ministry of Trade and Industries. They have offices everywhere, including in India, where these MATRADE officers will find, you know, companies that could match with Malaysia. So if I am exporting something from Malaysia, I want a partner here. So MATRADE will then run events and trade fairs to find trade opportunities. So that's something that India probably has, but we have not seen that much in. If you look at Malaysia, where we're seeing Indian traders are coming is along IT. For example, we use a lot of Indian IT in our bank. Also food, Saravana Bhawan and Sangeeta and so on. But beyond that, we don't see high-end Indian companies coming to Malaysia and having their presence there.
It may be true. Sorry, Hamdan, I just take one hand. See, I think probably we have taken the route from, see, for example, one of the themes which has been run in this country is like the brain drain we had, which people moving out, like I think raising capital in the Western countries and staying back and, like, you know, raising their businesses. Today, thanks to incubation centers, the best of ideas, the best of brains, like I think, you know, our ability to fund them, our ability to give them capital at the very seed stage is far superior. I think, you know, probably like I think we would be in the top 2, 3 of the world, like in terms of funding those kind of like innovative capital. That's like I think true. But where I think we have lost out, I think, you know, I would not say lost out, I think maybe where we are beginning rather, is the manufacturing led, like I think, which is, you know, we had many constraints, the reforms have been initiated, but I think they are very far, slow. The biggest reforms, like I think in the manufacturing sector has come in the form of labor reforms. It just got announced, like I think the new labor codes got announced about 2 weeks back. We had close to about like I think 5,000 odd regulations or 5,200 odd regulations on labor related things. It has just been shrunk to 4 codes. Okay. So, so things have been, certain areas like I think it's very politically sensitive, irrespective of who rules the country, whether it's state or central. So I think that's a lot of give and take, but I think slowly and steadily it is moving. But there are, where the innovation, like I think top talent staying back, you don't want them to go out of the country. I think we have done probably a good job. Like I think in the last 2 decades, we've done a very good job.
The last thing is if you look at the trade, because if you look at the SMEs, the SMEs that really grow big are those who actually trade. If they are domestic focused, there is limitation in how much they can grow. But if they export, the sky is the limit when it comes to potential. So that's why I think it's important for you to diversify. After what happened with Trump imposing additional tariff, same thing happened to Malaysia. We have reduced our dependence on exports to America from 20% to now around 12%. We have actually diversified, and hopefully by next 2-3 years, we could completely, rely less on America.
I think we spoke about quite a bit about MSMEs and so on, the need for capital, but also on the context of because the future is about how do you encourage entrepreneurs to step in to take risk. While we speak about all of these new startups and all that, what is it that's holding them back, or what do they really need? Is it money, or is it speed, or is it certainty, demand visibility, ecosystem support? Maybe if each of you can give a quick perspective, because we are going to end the session, but I thought we can hear your views first.
No, this question is the key factor of success. If the vision that has been set by UEF in regards to 4 trillion for Tamil Nadu, if it needs to success, this is the key factor that has to be considered. I mean, the whole intent behind an event like this is to create that awareness. How can people come forward, come out of their cocoon, take that risk, and build that resilience through an ecosystem? But that ecosystem has to be much more than what it is today. And that's where I appreciate the kind of feedback or inputs that has been given by Mr. Bala in regards to how you have to probably decentralize that on a village basis, on a taluk level, because it has to be deep dive further into it. Because on a macro level, everything looks good, but you have to go on a micro level. You have to go down, customize it to each sector, each community, by having a customized system in place, which then addresses the factor. So it's not money. Money will follow. You need to have the excellence. Excellence kick in, money will come from every direction that you think of. And I feel that's where UEF has become that beacon for that particular growth.
Do you want to add anything on Bala?
No, I just want to say, like, I think whatever sectors which have grown in the last 2 decades or 3 decades has been less regulated by the government. Yes. Okay. Take software, like I think, much before the policymakers knew what was happening, it has grown. So they couldn't do anything. Okay. I'm sorry, like I think if there are policymakers around. So I think, I would advocate that I think you please stay away. I think, let the innovation happen. So I think don't disturb us too much. So I think that's what I would say. Like I think that remaining, we will take care of it. I think, there are examples of that. You provide the support, you provide the ecosystem, and then leave us like little bit of like, I think, flexibility. And that's what would happen.
Rafi?
Yeah, I think there is no shortage of innovation, ideas, as well as capital. What I think is lacking is the intermediation between the idea and the capital. So we need a platform, an incubator, plus an accelerator. So if you have enough people with funds coming in, and today with the technology that we have, we can make this platform completely digital. Investors can come in to evaluate like a Shark Tank event, and then co-invest. A group of 10, 20 people can co-invest and then scale up the business. Maybe that's what UEF can do, probably.
I will come to this statement on what can UEF do, but In one sentence, what is a single bold change Tamil Nadu must make to unlock the next wave of growth capital?
My take on
One
that,
sentence.
awareness.
Not one word, one sentence.
Awareness is the key factor for this to succeed. For example, me, when I came in here for last 2 days, I didn't know any of these facts. I didn't know the growth rate. I did not know the communal harmony. I did not know the different sectors which is in place. So awareness on a global perspective will for sure attract more capital, which will help the whole project.
And Rafi?
I think to me is connecting the innovation to capital. That's critical.
Innovation.
I think, we have got everything going for us, except one thing, maybe a little controversial. We need to consume less liquor.
So let me close with one thought. Definitely capital is abundant globally. What is scarce is patient, aligned and risk-sharing capital that supports long-term transformation. Tamil Nadu's future will not be defined by sectors it promotes, but by the capital architecture it builds. If it gets that right, the 4 trillion vision is not just achievable, it becomes inevitable. Thank you to our panelists and thank you all for being part of this conversation. I would like to invite Brother Ahmed Buhari to come to the stage. Brother Ahmed Buhari, can I invite you to the stage? Because I believe there is an announcement that probably is eclipsed in people's mind. It was announced on the first day. The effort by UEF to put in 25 crores together with Anicut Capital 25 crores and now to be supported by MBS. So I will invite Brother Ahmed Buhari to say a few words and to invite the other partners to come together.
Good evening. Hamdan, thank you so much. Thank you so much for wonderfully moderating the session. So I want to thank my dear friend, Mr. Balamurugan. There's a very interesting story to this, right? He's been in touch with us for almost 10 years, Mr. Bala. And about 4 or 5 years back, we were about to announce an Islamic-oriented Sharia-compliant fund. And he was the first person to come and say, I am willing to invest, at that time, 8 or 9 crores. And I asked him recently that, we have all these entrepreneurs who are from the community and otherwise who require the funding. And he just told me, he says, just tell us what we have to do and we'll be there with you. So that's the type of commitment, that's the type of support he's given. He was here earlier moderating the session. So now we are very, very, very happy that he's also agreed to come forward to support us once again. So it's the UEF Venture Capital Fund, for which we are mobilizing about 50 crores to start with. So it's going to be 25 crores from UEF, from members and whatnot. And anybody who wants to put up their hands to start investing, we'll be very happy. Any hands, please? Any hands? 1, 2, 3, 4, 5, 6. I think we're almost done. Yes, so 25 from our side, from UEF side, 25 from Anicut side. And of course, we've got Rafi here, we've got Hamdan here, we've got Ajmal here. All of them are participating. So we've got, wonderful people. We're going to start off with the Anicut UEF Venture Capital Fund. Ajmal has also very kindly agreed to support us through MBS, for any venture capital funds that, transaction we may have from UEF to work with the Middle East. And of course, Rafi and Hamdan have always been extremely supportive. So I think we need to give them a big round of applause for supporting us with all this. So the UEF Venture Capital Fund, with this we'll be launching it. Mr. Bala, thank you so much for your support. Hamdan, of course, Rafi, Ajmal, everybody's been extremely supportive.
Bala,
so thank you very
Ajmal,
much.
do you want to say anything?
You want to run that video?
One last statement. This man's leadership is priceless. And I want to see how the next generation can work closely with him, where everybody can actually take this beacon for the future. Just wanted to convey that.
Thank you, sir. Thank you, moderator. Thank you, panelists, for that wonderful discussion. Unbelievable. And now it's time to request our president, United Economic Forum, to give away our tokens of appreciation. Janab Nasir Sahab, can we have you on stage at the request of our president? He would like you to give away the tokens of appreciation to our moderator and panelists. Can we have General Zamiruddin Saab also on stage, please? So to our moderator, Dato Hamdan Abdul Majeed. Big round of applause, please. Our panelists, Mr. IAS Balamurugan, co-founder Anicut Capital LLP. Erudite, to the point, always talking with ground realities. Mr. Rafe Haneef, Group CEO, MBSB Holding. Global thought process, big money, big funds. How do we utilize them to the best of our abilities? Mr. Ajmal Sharafuddin, Executive Director, MBS Global Investments, Dubai.
Everyone, for me to receive this from this man, I'm very privileged. He's my closest buddy, my companion. Every time I come to Chennai, he's been the best host. To get this from him, I feel especially privileged.
Can request the dignitaries on the dais to please come together for a group picture, please.